Hello and welcome to another episode of Startup Hustle Middle East. We are at STEP Conference for the third time in a row. We are very excited to be media partners again and to make connections like Vijay, who we've tried to have on the show before. Vijay Tirathrai is the managing director at Techstars, and he's also a mentor to startups, and he is a very familiar face at STEP Conference or events related to entrepreneurship. So we're very happy to have you on the show.
Well, it's my pleasure to be here this afternoon, and thank you very much, Mamta and Siddharth, to have me on your show.
Of course, it's our pleasure.
It's now one of the most widely talked about podcasts.
Thank you very much. We try. Great. So Vijay, if you can tell us a little bit about, you've mentored startups, you've invested in startups in the early stage, in the pre-seed and seed stage. So as an investor and a mentor, what is the best advice you can give to entrepreneurs and founders?
Well, thank you. That's a fantastic question because it opens up a lot of windows for me. Mm-hmm. But let me begin by saying that aside from my official role as a managing director at Techstars, where I invest in early stage tech companies, I've been an entrepreneur for the last 35 years. I've built and grown several businesses. A couple are very successful, and I should say many more less successful, or what I like to call the school of hard knocks. Mm-hmm. That's the best return I've had, is those lessons learned from there. And I think a long time ago, consciously or unconsciously, I've decided to make my life mission to help other entrepreneurs succeed. So my success is defined by the success of other entrepreneurs succeeding, and that is my why.
Okay, your Simon Sinek why.
Yeah, and I think starting with that why gives me the impetus to do what I do today successfully. So that's the first thing I want to say. In terms of helping entrepreneurs, I think entrepreneurs themselves, they can figure things out. They can help themselves as they like. What I do is I look at myself as a facilitator, opening up doors for them, access to networks, access to capital, access to talent, and access to business opportunities within my sphere of, my way of doing business. And so, in many respects, entrepreneurs that deal with me or work with me through the portfolio companies that we invest with invariably have an unfair advantage, as I like to call it, because they get leverage from my relationship to access to a wider network around the world. And whether it's Techstars or whether other network organizations that I'm affiliated with, they can take advantage of that. Of course, I do get a lot of unsolicited requests from many entrepreneurs to wanting to get my help. But I am selective. I like to work with entrepreneurs specifically who I think who genuinely wants to help themselves, that they are coachable, they're great listeners, they're willing to take constructive criticisms well, and they're willing to work hard because ultimately you can give advice, but if they're not able to convert that advice into some form of learning and action, correct, and then it just falls on deaf ears. And so I take pride and joy seeing, not when an entrepreneur listens to a conversation that I'm interacting with, but the actions and the results and the outcomes that you see coming out of that conversation. That for me, it's the most rewarding win, if anything. And that keeps me going on a day-to-day basis.
Great. Yeah. I think in order for the ecosystem to grow, to mature, we need more Vijays then, A founder's life feels very lonely. It feels like you're in it and grinding and being resilient, but all by yourself. So it's good that, we have people like you that are encouraging and giving advice and opening doors for these entrepreneurs. You mentioned that you're also affiliated with other organizations as well. So can you share a little bit more about that?
Yeah, look, I think over the years, as an entrepreneur, I've been involved with the Entrepreneurs Organization. That was a former role I had as the CEO of the Entrepreneurs Organization. It's a global network of successful entrepreneurs with 20,000 members. I've been involved with the Young Presidents Organization, organization with young presidents around the world, numbering 30,000 people. Involved with the International Deal Gateway, which is a deal platform for transacting any opportunities from investing to M&As and so on and so forth. And of course, then you have several industry affiliations and as well as networks through LinkedIn and so on. And so I think a word that you may not particularly like is ecosystem. And when you've been in the ecosystem long enough, you invariably meet a lot of people from all walks of life, whether it's investors, startups, founders, government agencies, enablers, and so on. So it's very easy to basically make the connections rapidly.
Sure.
And I think that's the privilege I have, having served in the ecosystem long enough. But coming back to your question about mentoring, I think to be a mentor is not an attitude, but the willingness to basically give first. And there's something that we say at Techstars a lot is, you just want to give first without any anticipation of something in return. And I think when you give first, your whole mindset in terms of your heart opens up, and you offer wisdom, you offer insights, you offer feedback, and you offer your connections. And it's amazing how much it goes. And you might do this for maybe hundreds of different founders, and not for a moment you would think that I expect something in return. That to me is being a true mentor. And I think, the universe works in tremendous, mysterious ways. It comes back and gives you all the gratification in some shape or form. And I'm just being grateful to have this opportunity more than anything else. And I think I would have hoped that in all these years that I've impacted somehow or influenced the thinking of many of these founders to excel in their endeavors in so many ways. So, as they build their companies, it just takes one small idea, which could be a fraction of a percentage of the total value they're getting. But that fraction of the idea could dramatically shift that trajectory, and they could gain tremendous success. And so for me, it's really, throwing out there a wide cast of net of different ideas, but it's just that one gem of idea that can really change the trajectory of a business. And that's really what I hope for them, that will happen.
That's awesome.
It sounds very altruistic for an investor. Give first with no expectation and anticipation.
So I'm just curious, for Techstars, you guys invest into early stage startups. So what do you guys look for when you're looking to invest? And what is the most important factor for you?
Yeah, so I think, from an investment perspective, we are for profit. We need to look at companies that can make a return for ourselves, but also for our stakeholders, the LPs that invest with us, our corporate partners. And when we invest in very early stage. We are, by definition, a pre-seed investment company. And at that stage, it's really, there isn't much financials to go on. For example, a balance sheet or profit and loss. And more often than not, it's a sweet spot between ideation and your first full commercialization of your product, and in terms of going to market. So what you're relying on primarily is the quality of the team.
Okay.
And that's a subjective thing to look at. And I think with my background as an entrepreneur, together with my team, we all have strong track record in terms of our entrepreneurial experience. We've built and exited businesses multiple times, and having worked with so many other entrepreneurs, it gives us the at many times you have to make a gut feeling, a gut call. Who do you think are the right founders to bet on? And we do rely on that, and the gut is important in this situation.
Mm-hmm.
So the team is, as you probably may have heard multiple times, is the paramount importance, the quality of the team. And because they're the ones who are going to shape the vision and the strategy of the business model, the technology can change overnight.
Yeah.
Right.
But the team cannot change overnight. So really what you're stuck with is the team. So in the selection process,
Mm-hmm.
I take a lot of interest in engaging with each founders, understanding their psychology of why they're getting into business, what's been the track record, what's the past experiences, as well as how they're going to solve the problem. And I think it has to do a little with your academic qualification. It has to do with your track record in terms of building stuff, executing things, and so we tend to look at that. Of course, the market opportunity is something that is also of great importance.
For sure.
Right.
And we try to rationalize whether the product or the solution that you're trying to bring to the market is viable enough. I would like to think that those companies can attain $100 million in terms of say gross merchandise value in many cases for it to be interesting enough. But at times we really don't know the exact numbers, but we believe that the team can go and figure this one out. And I have many examples of where we've invested companies at pure ideation,
Mm-hmm.
even without a
proof of
product in
concept.
place. Yeah,
Yeah.
But based on a proof of concept or an MVP?
not even an MVP. I take a company like Blueflight, for example, which is I invested with through Techstars 4 years ago. Four co-founders from McKinsey. All they had was an idea to build a flying car, and we sat in Costa Coffee down in Jumeirah Road, and they sketched out to me the idea. There was no product, no prototype, no engineering designs whatsoever, but they convinced me they can build this thing. And within 90 days of us writing a check, they built a prototype, and the actual machine flies. And today they've got numerous contracts in the Middle East as a cargo drone company.
Wow.
Oh, interesting.
Right.
That's
But to
amazing.
taking that decision 4 years ago with no evidence of a MVP, a prototype, engineering drawings, nothing, other than just 4 brilliant co-founders, it's a type of decision that we're able to take.
Because of your experience.
And then you would say, would every individual with an idea on a paper napkin walks in, would you invest? The answer is no.
No.
Yeah.
You really had to see through the potential of this, and again comes back to the ability to execute that vision.
Yeah.
Sure.
Yeah.
So, what are some of the cool startups that you've invested into?
Aside from Bluefly.
Well, I think if I had to pick your favorite children, I'd be in trouble. But we've invested over close to 50 companies since we've been here in the Middle East. We've done 5 programs, 2 in Dubai, 2 in Abu Dhabi, and 1 in Riyadh so far. And throughout these last 4 years or so, we've attracted a lot of companies from all over the world, not just from the MENA region. But what we've seen more interestingly enough are companies coming out of this region, which are comparable to any companies we're seeing from the US or from Europe. And that's what I saw a dramatic change in the last
The quality?
4 or 5 years, the quality of companies coming up.
Yeah.
And I think also the market is more ripe for it right now,
Correct.
for these companies to scale, and the acceptability from big corporates to partner with these startups to be able to work with them. A case in point, a company called Dirk that we invested, who went through our program, a mobility program in the US, is now working with Etisalat on autonomous driving on a project here. So they're doing some pilots here. But it's taken the company over 6 years to get to this stage.
Right.
And again, where was autonomous driving 6 years ago? It's almost like a far-fetched dream.
Yeah.
But today, every telco company wants to implement some sort of level of autonomous driving. And so Dirk is doing that right now. We've got a company called Polyloop, which we invested in out of Hungary, that are basically using bacteria as ability to digest plastics. And so that what it does is basically they can recycle all the 7 grades of plastics, including PET, PPE, and the sludge that they produce as a byproduct can be recycled into new form of plastics and make into new products.
Amazing.
Completely not just recyclable, but what they're also addressing is basically eliminates any energy consumption in terms of recycling. So even 9% of the plastics today are recycled, are basically relying on really heavy energy source to be able to recycle those plastics. In this case, is using bacteria, which basically you just put in a lab and they'll just digest those plastics within 30 days.
That's pretty amazing.
So that's the kind of cool companies that we're investing in. Of course, we have a lot more. They're not so cool companies, but they're doing amazing work. Like in fintech and, for example, in health insurance claims, to enabling what do you call merchant point of sales in countries like Egypt and Saudi Arabia, and the impact they're having to local entrepreneurs are tremendous because they are so disconnected with technology because at the moment technology is so either too fancy that they can't adopt it too easily, or for that matter is too costly. And so a lot of these companies like Tagati, for example, Glamera, we recently invested in, are changing that by providing low-cost options to micro entrepreneurs and so on and so forth. Another company that we've invested in is Three Wheels United. That's changing the way EV is being used in India. They are addressing the problem of just not emissions, but they're addressing the way that these vehicles are being financed by state-owned banks and lending companies, which is not allowing the owners or the drivers of the vehicles to really make a decent living. And so with this model that they have, which allows them to access cheap sources of capital, allows the owners of this, say, three-wheelers that provides mobility at a much lower cost, thereby doubling their income overnight.
Okay.
And so we are seeing tremendous impact, not from the emissions that they don't produce, but also the impact in terms of income, enabling their families to take away much better income, but also providing better efficiencies in public transportation in metro areas in India. And that's Three Wheels United. So I can go on with many cool companies, and that's one of the beautiful things that I do, is to look for these great companies and great founders who are basically impacting in every aspect of society.
Cool.
Great. You mentioned that you get a lot of unsolicited emails and things as well from founders that may not be so receptive to feedback or react to it. So how would people, what is the best way for a lot of our audience is in the early stages, potentially have an idea, probably a POC. So what is the best way for them to get in touch with you?
That's a good question, Mamta. I think to be very honest with you, I think the best way is through LinkedIn, and you can send me a message to say, look, I have a startup, I want to pitch to you. That's the most efficient way to do it. I think even better still, if you have someone that you can get a referral from, like a former Techstars company, a founder or mentor, that will definitely put you on top of the deck in terms of priority.
Getting an audience.
So getting getting a referral or a referral introduction is far more effective than just some random cold call, and that allows you to differentiate yourself from the rest of the crowd.
Okay.
I do get a lot on a daily basis, to be honest, and it takes me sometimes days, if not weeks, to reply to everyone, but I generally go through every inbound messages that I get.
That's amazing. Considering our audience, I wanted to know, do you think that the market is mature enough in the early stage, pre-seed stage when it comes to investors? Because it does seem to be that VCs tend to be a little bit more risk averse, and a lot of VCs are investing in growth stage, really validated businesses and products because of acquisitions made over the last couple of years. So do you think that there's a lot of opportunities to raise early?
Yeah, I think that's a great question, and I would say that traditionally VCs generally tend to focus on later stage companies because there's a lot more traction and evidence of their product market fit that makes them more comfortable to justify such an investments, and they tend to be also larger check sizes. And so the early stage companies, primarily at pre-seed and seed, is usually filled up by angel investors, family and friends around. However, we've seen in the recent months, if not just in the last year or two, an increased amount of interest, particularly by institutional investors, to get into seed and pre-seed stage, which is a good news for the industry, and which means their willingness to write smaller checks at a much earlier stage is a validation that the ecosystem is strong from the investment appetite. And I think also because it gives them their, a hedge into many of these companies. The potential will be successful, will grow in valuation a lot faster, rise a lot higher. So for them to catch them earlier, they tend to write checks earlier. So we're seeing that happening right now. However, I would say that the role for accelerators and angel investors in particular play a crucial role in the development of founders and startups at the grassroots level. And that too needs to be further nourished. I was recently in Saudi Arabia last week when we had our Techstars Riyadh demo day. And I would say that half the investors in the room are filled by angel investors, which is really great to see that, because many of the angel investors there are having full-time jobs. They're in corporates, they are in family businesses, but they're very eager and they have a keen appetite in terms of investing in early stage companies. And we like to see more of that, and we believe that's more is coming in part of that is because thanks to the media exposure to a lot of the startups getting a lot of visibility, is creating a lot of excitement in the early stage. I think for VCs by and large, where we're getting into the future right now, there will be specialists in different stages across the entire value chain, from pre-seed right to growth stage capital. And eventually all these VC firms that have come about in the last 3 years particularly will find their own levels to settle at. As far as Techstars is concerned, we believe that at the rate that we're investing right now, which is about 650 companies annually this year.
615 companies.
650 companies.
50, wow.
Globally, that is, not just in the region. We'll probably be the preeminent leader in a pre-seed investment company.
Okay.
And we decided that we like to just focus on pre-seed because we know how to do that best.
Yeah.
Could we invest in later stage seed or pre-A or Series A? Yes, we could. We do invest as a follow-on investment into some of our portfolio companies only, but we do not invest outside our portfolio. And the reason we're able to do that is because ultimately you have to be good at your game. And one of the things that we are good at is basically data. Our collation of data as an organization at pre-seed, how we identify founders, how we nurture them, how we track them on a weekly basis. That data no organization has at scale, as we do globally. And so as long as we believe that we are good in what we do in terms of focusing to a specific niche, we will attract investors working with us.
Awesome.
And the fact that you have been specialized and focused on pre-seed for as long as you have, it's been validated now by success stories, and it's allowed you to capture this data, which is great. Yeah.
So I'm just curious, what's your average ticket size with Techstar?
So when we invest as an accelerated investment company, we invest both in terms of cash and non-cash components. The non-cash is a larger contribution to the cash component. And so in terms of the cash component, it's about $120,000 US. But the non-cash can go up to about $1 million worth of value to a company. And that's the emphasis that we put there, because we tell to the founders that if you really want cash per se, then go speak to an angel investor, go speak to a VC. But if you're looking for a value add contribution in terms of access to a global network, if you're looking for access to investors, access to corporates, we have partnerships with 100 Fortune 500 companies globally. As an example, we have presence in 25 cities around the world. We have developed over 600 ecosystems around the world, and so we know people pretty much in every sector. We have specialists in health tech, in aviation, in space engineering, in healthcare, as well as in mobility. So in every aspect that you can think about, we have people within our organizations, whether it's entrepreneurs in residence or mentors that specialize in these areas. These are the most valuable assets the founders need to have right now if you're building a company, not to make fundamental mistakes about building a company. And so what we then do is to say, look, we will take 6% of your company in exchange for all these benefits, because we are operating as a co-founder like you. We're not just an investor, we're working hand in hand in building your company. And that mindset is different from, say, any other investor who's coming in, who's just putting purely
money.
capital. And so I think the relationships that these founders can have by leveraging through our network is 1,000x than what they can do potentially on their own. So our investment is just that. It's really the Techstars deal is a Techstars investment, which they get access to network, talent, capital, and
which is great
investors.
for early stage.
Absolutely.
Yeah, that's awesome.
To avoid making any
and this is
the network's
why
invaluable, right?
and perhaps maybe if I can respond in this way to your question, Siddharth, I think the question is not so much how much we invest, but more so when you look at the success rates of the companies that we invest. Now, you know very well that, say, close to 90% of startups don't survive in the first 3 years.
Right.
But 85% of our companies that we invest survive beyond 5 years. And so that's a very high number, which is inversely proportional to the reality outside. And the reason they're able to do that is the sustained efforts that we have working with them during the 3 months accelerator program and also beyond, because they're part of a global network of getting support. And so that's the first measure of success. The second measure of success is that within 6 months of them graduating from any of our programs, the vast majority will raise at least $1 million to $1.5 million in funding.
Okay.
That's amazing.
And combine, combined with all the entire portfolio companies that we have graduated last year, they raised $2 billion collectively as a portfolio. And that's going to grow this year as well to maybe $3 billion and above. And so when you're part of this amazing portfolio and amazing network, there's a lot of opportunities coming across in terms of business opportunity, M&As, acquisition for talent within the network. And that happens at a very rapid pace because you're part of the Techstars network.
Okay.
Yeah, that's awesome.
That's amazing.
Yeah.
Great. I think this has been super valuable for our listeners, and they now know how to get in touch with you. LinkedIn through a referral, and just the value that Techstars brings to early stage startups, and the value that it's adding to the ecosystem. There, I said it again. So thank you so much, Vijay, for being on the show finally, and for giving your time. And yeah, we'll see you at all startup events anyway, moving forward.
Well, I think there's a better way to make a referral. If they can get through Siddharth and Mamta, that's a better way.
Okay. So say reference Startup Hustle, Siddharth and Mamta, and Vijay is going to open that
That's
DM,
right.
that inbox
Well,
message.
thank you very much for the opportunity to speak with you. I think it's been
Great.
some time.
Yeah, it's been some time
But
coming.
thank you for the opportunity. I really
Great.
enjoed chatting with you on
Same,
this show.
same.
And
It
thank
was
you,
very
Siddharth, as
insightful.
well.
Of course.
Yeah.
Thank you for being on the show.
Awesome.